So, resuming this interview with Hamish Bohannan, CEO of Bathurst Resources. And we're talking about the prospect of a long-term sustainable plan for the West Coast, which some people might see a little bit as a pipe dream, and I think it's quite useful to try and address some of the practicalities of it. One of the issues in relation to that is the long-term price of coal, and the viability of this project is really dependent on that. It's also dependent on achieving economies of scale and that enabling you to reduce the cost of production. So you were thinking that your cost of production, including remediation work, is about $115 a tonne at present. Presumably, if you were taking a lot of the additional cost out of the consenting issues and you were also taking cost out because of economies of scale, then your production costs could be lowered.
That's right. In fact, the biggest cost that we will take out is the trucking, and that fits. Using diesel to truck coal is like a double sin. Putting the coal off the plateau on a conveyor belt, A, it's a lot safer, B, it saves money, C, it generates power to put power back into the grid, green power that comes from gravity, which is all very good and noble. But
it will be gravity fed, this conveyor belt.
It'll use motors as brakes to stop it going faster and faster, and that generates power which goes back into the grid. But yeah, prices do come up, do come down. I think there's 2 points that I would add to that. Firstly, this is premium coal, and this coal is for the steel industry. Yes, the industry and our universities and our science technology areas are really pushing to find other ways to do it without using coal, and there's charcoal, there's other elements, but today it's still in the laboratory. Hopefully in the not too distant future we get there. So it is always going to be a premium coal, so there's going to be a reasonable price for it. It's currently sitting at a low of about 140, 135 on spot dollars a tonne. US dollars. Unfortunately it's marketed in US dollars. Our cost will be about $115 initially, US dollars per tonne. There is a nice margin there, and that margin isn't profit. That margin goes to repay the 250 odd million that we will have invested in the project and all the other capital costs that have gone into it. So that all has to get paid back. And I think the other important thing is, so cash-wise, it's a robust project. This isn't low-quality lignite or anything like that really would be struggling to find a margin. This is high-quality, what we call metallurgical coal.
But if the price were to continue to decline, then you would probably struggle to get investment in it.
We would. But the interesting thing is that at current prices, about 20% of metallurgical coal producers are underwater. Their operating costs are above $135 a tonne.
So that's stopping.
Financial modelers will tell you that we've actually hit a natural floor in the price. It's not going to go much lower because you start really dropping mines out of business.
Right. Now, the special characteristics in terms of the low ash, I think, is another factor which might mean that the liquidity or the usefulness of West Coast coal in particular might be slightly counter-cyclical, in the sense that you blend your coal with other people's coking coal in order to reduce the ash levels to optimum levels, and there's no one else in the world that really has low ash coal.
Not of the low ash that we've got. I think that there's 3 or 4 or 5 characteristics that are very special in our coal, but probably the 2 easy ones to grasp. One is ash, and ash is, we're like doctors, we make these words up to try and make it more complicated. Ash is basically stone and sand and silt that's in the coal. It's all old vegetative material from swamps that doesn't burn. So it's just stones that don't burn. Our ash is generally well less than 6%. Global averages today are probably about 11%. So we're well below the average. It's a very good coal to bring some of these higher ash levels down. In fact, some of our coal seams have less than 1% ash. It's a very clean coal. Additionally, very low sulphur. And I was a kid in the 70s at school, and the big thing we were all worried about then was acid rain. primarily from power stations, putting sulphur fumes up into the air, which makes rainwater become acid. Is still an issue. You know, if sulphur's in a material, it produces sulphur gases.
And
Ours is very low sulphur.
And China's imposed some limits on sulphur.
China, for all the rhetoric, is a world leader in many areas on the environment, and probably because of their government structure. You know, when the government says jump, everyone jumps, or kill a fly, and they all kill a fly. So they've said, we will not accept coal with more than 1% ash. Ours is well less than 1%.
So in terms of the long-term sustainable future plan, though, you need to get, in addition to a profit for your shareholders, you also need to have this environmental dividend in terms of offsets. You need to pay for the remediation, and in terms of the idea of this being some sort of Norwegian investment for the future type exercise, you need to have a community dividend as well. Do you have a view on where the price needs to be in order to be able to maintain those additional elements?
Yeah, I do, and I've been quite out there. I think the price needs to be $130 or more. At $130 or less, you're barely viable, and it's very hard to put those balances back out. I don't see us getting down to 130. I think the 140 that it's currently sitting at in the spot price is a different story, but is a bottom. Time will tell.
Forest and Bird has estimated that around $40 million would be enough to conduct nationwide pest control on the conservation estate. Assuming your vision of 3 to 5 million tonnes of coal extraction a year were to be achieved, and at $200 million, or between $150 and $200 million, we're talking around $500 million or $1 billion of revenue a year. Are social and environmental dividends of that scale possible, do you think?
Crumbs. Alastair, I think that's a good question. I've got to be honest and say I need to have to get my experts behind me and do the sums. But I think the reality is that the resource sector and ourselves, Solid Energy, can make a huge contribution, not insubstantial contribution. So, you know, but without doing the numbers, it's difficult to say exactly what that would be.
At the moment, the government's deciding what to do with Solid Energy's assets. And I mean, of their assets, unquestionably the most valuable by a long margin is Stockton. In their response to the articles that we've run so far on the whole Denniston issue, Forest and Bird suggested that if a long-term future for coal mining on the west coast were possible and it was sustainable, that it ought to include some degree of community ownership or community stake in the mining operation at a sort of a partner level. Is this something? I mean, I suppose we have examples of that here in Wellington. We have an airport which is partially owned by the council, and I mean that's true of Auckland as well. Is that the sort of structure that would work, do you think, from a mining perspective, and also would it be investable?
I think Bathurst is open. I think one of the commitments that we gave early on in the piece was to collaborate with Solid Energy. There's huge advantages there, not duplicating infrastructure, maximising returns for the community. And I think in much the same way, we are very open to, we're a listed company, so there's opportunities for groups to come in, and we are absolutely committed to increasing our New Zealand component on our shareholding. So there's a whole suite of models, and I agree absolutely with where Forest and Bird are coming from there, that the community needs to have an ownership, whether it's a financial ownership or some other structure. All those avenues are open. And that's some of the things that we'll talk about with the community.
That's certainly something that would address a long-term view about both mining and especially mining on the west coast, that it's predominantly been an activity which has been undertaken by large capitalist organisations from outside of the coast. One of the things we have at the moment is we also have this alliance in Stockton between Downer EDI and Solid Energy, which is in some respects already and your relationship with Solid Energy too is unusually cooperative when it would appear that you're in the same business and competing with one another. I mean, there's clear evidence that they were keen to assist us to report your story, and they were talking openly about the fact that they were learning stuff around direct vegetative transfer and rehabilitation technologies and so forth, which they expected you guys to utilise. So, I I mean, again, I suppose it's the same question as the last one. I mean, that does seem to work at the moment. Do you think that there's a possibility of some sort of coalition of interests forming a plan around the Buller as a cooperative but also profitable venture?
There's probably two themes tied up in there. I think there's definite advantages in us collaborating. The reality is that we are small players in a huge industry. There's 6 billion tonnes plus of coal mined every year, and New Zealand in a good year might be 6 million tonnes. So whilst we're competitors in one small domain, in the big picture for the industry, we're not competitors at all. And then you're talking corporate structure, and obviously Solid Energy is a state-owned enterprise. So there's structural issues, which there may be opportunities in, but there's also infrastructure issues, which there is collaboration. We already have an agreement with Solid Energy on the railway. Equally, we've already agreed with Solid Energy that they can use our conveyor belts and related infrastructure. So that's already in place. There's collaboration, there's working together for the community, and then there's corporate structure, which is really a different game altogether.
Now, levels of investment. How much investment is required to get escarpment up and running?
Well, most of it's committed already, so we're pretty well there. I can tell you exactly what it is. There's $10.8 million for the water treatment plant, and we've allowed about $10 million for our pre-production costs, our mining contracting costs before the first coal comes out. I think we've been very conservative on the latter, and we've got actual fixed contract costs on the former. So relatively little, and this was part of what I said before, standing on Mount Rochefort looking down, you can see everything. You don't have to build a town. There's a railway in place. There's 2 routes to market. The community's there's power coming in. So the actual capital cost now to get into production is relatively small.
What about investment to do a full-scale plan? I mean, if you wanted to build a plan for the full exploitation of the entire Buller resource over a 50-year time span, how much work would be needed to be done?
That is what we're doing. That is the nature of our business, is basically drilling holes to determine where the coal is, building mine models about it, how the material can be extracted. That is the core of what we're doing. That is, there is a capital cost involved, but it's not substantive. It's just the time it takes to do this. You can't just go and drill 1,000 holes. It takes many weeks and years to do that, to gather the data, to interpret the data, and to turn it through.
And I mean, if you were to achieve your vision of like 4 to 5 million tonnes per annum of extraction, how many jobs would that look like?
We believe on the west coast there's room for about 4 million tonnes. The rest is our other operations to take us beyond that. We can see that ultimately there'd be well over 400, probably 500 jobs.
Okay. Now, final point. Jeanette Fitzsimmons, in her opposition to the Denniston mining operations, has made 2 points, one of which is about the use of charcoal. And we addressed that in our article. Essentially, the problem with using charcoal to make steel is that it's not suitable for modern industrial steelmaking processes because it's not strong enough to cope. It can't support the weight in modern steelmaking, sort of continuous vessel steelmaking processes. The other argument that she made is that there's some alternative to, or that we should be thinking about using alternatives to steel somehow in the construction of the future. Your response to that is to say that this is a transition investment to a more sustainable future. Do you want to talk a little bit more about that?
No, happily. Absolutely, we are concerned about climate change and our demands there. But coal needs to be a transition. Carbon dioxide, too much of it is bad. Clearly there's room for some. We are a carbon-based planet, and we need carbon dioxide for our trees to grow, but the levels that we're producing today are unsustainable. There's no doubt about that. One of I was in the titanium business with Iluka for a number of years. if we can get titanium to be a bulk produced metal, then there's great hopes for us stepping away from steel. We haven't got the technology yet, it's still out there. We've got magnesium under our belt, aluminium not so long ago. I'm confident that we will develop new technologies and get into new processes. So, and that's why it's a transition. I believe we need to have hugely cut back the amount of coal we're producing. But we're not producing coal to make a profit, we're producing coal to satisfy demand.
For steel.
For steel and energy. We passed 7 billion people on the planet February, March this year.
Yeah. But leaving aside energy coal, in this particular case we're talking about coking coal.
Yep, but even then, 7 billion people need everything from bicycles to mopeds to cars to fridges to beds. To skyscrapers. There's still a huge demand for steel. So whilst our steel recycling is pretty efficient today, we're not wasting much steel, we can still do better, but we're pretty efficient on steel recycling. It nowhere satisfies the overall demand. So absolutely agree with the Green Party and Jeanette Simons and all of that we need to find another material to let us move away from a carbon-based industry, which it is still. We haven't done it yet. I'm confident that we will do it. That's why it's a transition material.
Thank you very much, Hamish.